Today's video, what I'm going to do is step a little bit away from the 100K challenge. I'm actually going to do a weekly analysis with you guys. Um, this week, I will say, has been a little bit of a struggle for me. Currently, I still am. Yes, I'm still on the 100K challenge. Mentally, I've just been drowning myself in the fact of missing one concept. And I would say that's basically my stop loss. Keeping a tight stop loss has cost me a lot of losses whenever it was a winning trade. More or less in this video, I'm going to show you recaps. Basically just this week, last week, I'm going to show you how you should place your take profits and stop losses. I'm also going to show you my strategy backed up with it. So this is just going to be like a conjunction video. I would really tell you to take notes in this. If you don't, 100% okay, you can just rewatch the video just so you can have more clarity. But I'm going to back this up as far as I can. And this might be a little bit of a long video. So hang tight. Okay, we're gonna just start with Monday. Let's go ahead and back it up with news. Um, I'll do this. All right, Monday, we didn't really realistically have news because I think this was a holiday. Tuesday, we didn't really have news because I'm looking at it from 9:30 to, let's just say, 12 or 2 o'clock, you could say. In those time frames, people are trading in that time zone. People are trading. Wednesday, this is where you can necessarily say that we did have data. 10 a.m., more or less, yes, that had to do with data. Realistically, everything else, President Trump speaks. Thursday, we did have some data. 10 a.m. once again, but not necessarily anything. And Friday, this is where we actually had data. 9:45. Obviously, 9:30 is market open for New York session, and then to 10 a.m. What I'll say about all this, I check news only to look for certain core things, like CPI, PPI, unemployment claims. What's the one I'm actually looking for? See, like this is important. What is that other one? Um, let's see if it's next week. I just want to show you FOMC. Those are huge, especially on a red folder. But not to get carried away, let's go back into looking at the markets. So obviously we didn't really have news until Friday. Looking at this, I'm gonna play my strategy. I'm gonna show you guys where I shouldn't have traded, but I chose to trade. Let's just go ahead and mark out pre-session low and pre-session high. Now, to back this up, as you can see, what I should have done was look at the trend previous to market. Right here, we have a high that gets swept right at London session, and then we end up creating a breaker structure to the downside, which means that we are in an uptrend. With that being said, if we identify that we are in an uptrend, we should realistically only be looking for, if we've identified that we've been in a downtrend, realistically, what we should be looking for is sales. Can we look for buys? Yes. If we get a 1 hour liquidity sweep in this situation, yes, we did. So let's just say we're currently looking for buys. All right, right here. So I just want to bring this out here so we can see this. So what did I just sit there and say? We're in a downtrend, but we want to trade against the trend just because we have a 1 hour liquidity sweep. And then what we're going to do is look for a 5 minute liquidity sweep. Did we catch one in the 5 minute? I would say yes, right here. This low got swept right after market open. We draw down to the 1 minute. Oh, this is getting sloppy now. I hate when it does this. Okay, I'm gonna read this and then we'll go back to the market. So in the 1 minute, we're looking for a full strat. Liquidity sweep, breaker structure, fair value gap, fair value gap, or inverse fair value gap. And we need a valid retest. Let's just go ahead and look at this. I'll get rid of this. All right, so here we go. We have, I'm gonna do this simplified as much as I can. We get a sweep, we don't get a breaker structure. So that's invalid. We get a sweep and we don't get a breaker structure. So that's invalid. Not a sweep. I mean, not a not a sweep if a breaker structure comes into play. So now look, we get a sweep and we do get a breaker structure. And what I mean by we don't get a breaker structure is we're not getting a breaker structure to the upside, as in it being like the next couple candles. If it's like 10 candles ahead, that means that there was another sweep that was created, or price is just, ranging in a certain way. So we get a sweep, we get a breaker structure right here off of this high. Wait, black and blue. Yes, no, blue and black. This is a high. Ah, that's confusing me because of the candles being so weird. We get a breaker structure. Now look at this. We have a fair value gap, but we do not get a retest. So what are we looking for? Wait until we see a fair value gap that actually get retested. We get a fair value gap right here. No retest. We get a fair value gap right here. No retest. So, if we keep looking, I want to show you guys something that we missed. We didn't realize that there was an inverse fair value gap right here. Look at that. Breaker structure above the zone and then a valid retest. So do you see how we could have easily missed this trade? You see how I could have tricked you guys just by continuing to make fair value gaps, but I didn't check if there was inverse fair value gaps. So with that being said, there's always a retest somewhere. Price just don't go in a direction. There's not one type of retest. Even if it's an order block or whatever it may be, some of you guys trade order blocks. I don't. I really realistically don't. But let's say we entered right there. Now, I'm gonna also bring this into play. Let's say we catch a valid inverse fair value gap retest. Where your stop loss should be or could be, if you want to play it safe, I would keep it at the most prominent low, like the most respected low, which in this scenario would be this low. What you also could do is put it at the previous candle low. So right here. So if we just put it right there. Now let's go back to the rules. When we're trading against a trend, what we should be looking for is a 5-minute TP or a 1-minute TP. I'm gonna go ahead and go down to the 5-minute. And let's just go ahead and get rid of, actually right here. Let's just mark out some of these TPs. I'm not gonna put this because this is just obviously, I wouldn't even take a trade if I was literally going for 3 pips. It's what it seems like. Marking out this high, marking out this high, and marking out this high. Now, the reason I would have picked these highs is obviously because this is just an area for liquidity to be attracted to. In the scenario, as you can see, we would have sat here for a little bit, been in this trade for a while. We would have been in the consolidating phase, but at least we would have caught a W. And we wouldn't have to worry about being out of profit, for a long time or just at all, more or less. There's sometimes you're going to get in a trade, it's going to consolidate, but it will, it will end up hitting your take profit. I cannot speak for nothing right now. But as you can see, let's say we got in this trade at 9:47, got out, been in this trade for almost like an hour and 30 minutes, I would say. But you at least would have caught a good W. This would have been, let's say, 62 to 18 pips. Nice trade. Simple as that. Yeah, it would have caught you 2 hours almost, but look at it like this. Would you rather work for 2 hours or would you rather work for 9 hours and still not make nowhere near as much as you made in this trade? Simple as that. Let's move on to the next trade. And the whole point of what I'm trying to explain to you guys is if you actually have a rule book, just anything, it's easier for you to see it. And it's easier for you just to go by it by just literally saying, all right, I filled this one, check off the box. All right, I filled this one, check off the box. All right, this one, check off the box. It makes it easier when it's right in front of you, all because you won't sit there and basically, um, I'll give you an example. You can sometimes look at the market and be so impatient that you create something that is not in front of you. I can sit here and say, oh my gosh, price is going to reverse after it hits this high. And I'll show you guys. Price is going to go all the way back down after it takes out this area of liquidity. I would have been right for about, let's say, 10 pips. But then what would have happened if I would have stayed in this trade and never pulled out because my SL was all the way up here? It would have been in profit for about, let's just say, a couple $1,000s. We would have came back, got taken out. So this is what I mean by, don't sit here and just free will it. You can. It's not hard to. You can trade without sitting here having to look at this, but it just holds you more accountable because then you can say, well, I just didn't trust my trade or I just didn't follow my rules, more or less. That's just all I'm getting at. Let's just go ahead and go to Tuesday. Let's go back into the 1 hour. Oh, all right. So as we can see, previous to market open, we have a high right here. We have a low right here. Would I consider that a low with market open? I'll just consider this a low. All because the candle opened and it ended up creating a low, but I'm not going to do that. All right. So as we can see, previous to market open, yes, we're in a downtrend, but price is now starting to create, uptrend candles. Did we get a sweep? Would I call this excuse me, would I consider this a sweep? No. Would I consider this as in, a higher low? I mean, a lower high? Yes. What I'm getting at is, yes, you can take trace the opposite side trend. I cannot speak. Oh my goodness. Let's just go ahead and say this. Yes, we see that this high got swept and we're in a downtrend. So what would I say? We could be looking for sales. Oh my goodness. Praise God. Let's go ahead and bring this back. We are in a downtrend. Just realistically want to stop talking. Going into the 5 minute. All right. So in this scenario, what we should have done is the moment that we got a sweep off of this candle right here, we should have waited for price to show us something. And this is the part where I've been getting cooked lately, all because this consolidating phase. It's like every other session, it's moving up or down. You get to New York this entire week, it's just consolidating. And I've gotten cooked from that. So I'll show you exactly how you could have easily gotten cooked even while following your strategy. So as you can see, we're in a downtrend. We catch an hourly sweep. Put it to you like this. This is a high right here. Blue candle and a black candle creates a high. This high ends up getting swept by this high. Draw down to a lower time frame. So with us following the trend, I can basically, trade any. I mean, have any time frame take profit, dude. Oh God, my words, Lord forgive me. So with that being said, we caught the sweep. Now, do we see a breaker structure? No, absolutely not. We get an hourly sweep, a 5 minute sweep. We do not get a breaker structure. Okay, so what we're going to do, we see another sweep. So right here, let's just move right here. We catch a sweep. Do we catch a breaker structure? No, we do not. So the thing is about this, I shouldn't have traded this. But what I did, got carried away. I saw this inverse fair value gap. Saw a rejection off of the zone. Let's just say we entered. Stop loss above the wick or just stop loss above the zone. Let's just put it like that. And targeted previous low. And as you can see, I would have lost this trade. Now, one rule that I broke that is very, 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 very serious is the fact that I disrespected the fact that there needed to be a breaker structure in play. It can't be a breaker structure after the retest. It has to be before. So I have to get liquidity sweep, breaker structure, and then a retest. And as you can see in the scenario, we get the sweep, we get the retest, and then we get the breaker structure after, but price wasn't going in that way, in that direction. And it was all because I broke my rules that I expected that this to work, but it did not. So I'll just go like that. Now, in this scenario, with us sitting here, obviously breaking this whole consolidating phase, coming down, sweeping these lows, and then we're creating record structures and liquidity sweeps to the upside. Yes, there could have been a buy in the situation, but realistically, that's once again going against my rules, all because I knew for a fact we were in a downtrend and we had a liquidity sweep to the upside. So realistically, I shouldn't have traded this because it's just too choppy. There's not much you can do whenever price is in a sideways trend. Now, am I saying that you can catch like dubs in a sideways trend? Absolutely, you can, but you're forcing things more than actually just following your rules. And I'll put it to you like this. Whenever you're sitting here looking at the market for hours, you might as well go ahead and get off. Only because you can sit here and put yourself in a situation where you're staring at the market too long and once again creating a whole scenario that has not been has not been put before you. Now, yes, I could have sat here and done my strategy from here, but dude, it consolidated for 3 hours. I shouldn't even be looking at the markets. So Tuesday, let's just put it like this. There should have been no trade. All right. Let's just go ahead and go into the 1 hour. And excuse me, guys, for just being very sloppy. I just been, once again, mentally not in the best place. So like stress has been getting the best of me. But my Lord, my God is here to comfort me. All right. So when the hour, we looking at market session. Obviously, previous to market open, we see that we do get a liquidity sweep to the downside. Now we're starting to create a reversal trend, all because we did catch a breaker structure. So liquidity sweep, breaker structure, and now obviously we're looking to the upside. So what would this scenario be? A uptrend. Pray for your boy's mental. You're recording? Yep. Give me 1 second. All right. So obviously we're looking for an uptrend. So what we should be looking for is buys. If we go ahead and look at this, I'm gonna bring this beside you guys just because I want you to see this. What we're looking for is a liquidity sweep on the 5 minute. And as we can see right here, market opens, there's a low, we get a sweep. Now, with that being said, we draw down to the 1 minute. We gotta be real careful because once again, market's chopping. All right, so what do we get right here? Off rip, we get a sweep. We get a breaker structure up here, but I'll explain to you. There was a inverse Fair gap retest, and I did break my rules, and I actually took this trade. But I want to show you guys it worked in my favor, all because we were going with the trend, and we also saw a liquidity sweep in the 5 minute. At the end of the day, still broke rules. Can't sit here and justify that. Um, that would have been a solid retest. If we would have waited for the fair value gap, the breaker structure, I would have I would probably say that the only one that I could have waited for was this one. After the breaker structure, we called a fair value gap retest. Also right here, same thing. Fair value gap was retested. If we go ahead and draw down to if we go ahead and pull up the entry would have been at obviously this low where we would have targeted. Let's go into the 1 hour since this is with the trend. Okay, what is the frick is happening? All right, what we could do is, this is not necessarily a high, but I'll just target this one. As you can see, we would have caught an insane trade. Now, this day I did catch a trade, and I will say that lately I have been trading emotionally. So that's where I'll end up being in a trade, get myself stopped out too soon just because I don't like it consolidating and taking out more than it needs to. But look how beautiful this trade would have been. I mean, we would have got in at 9:48, got out at 10:40. So basically like a 1 hour trade, we would have caught so 82, 30. We would have caught almost a 40 pip trade. Well, actually that is 40 pip. We would have caught a 40 pip trade, which is really insane. That could have been like at least, we could be talking about like, I mean, $10,000 with this trade. And the reason, once again, I'm going through this because I want you guys to see this, that if you have the right stop loss, if you have the right targets, you don't have to sit here and put yourself in fear. Every single trade that I'm showing you guys, there's not been one time that I've been in drawdown. Now, am I saying that sometimes, depending on what broker or depending on what platform you use, you won't be in drawdown off the rip? Yes, you will be because of spread. That's just plain as day. It's just what's going to happen. But if you follow your rules, you have a solid strategy, everything will play out. It'll just be very, very clean. Let me get rid of all this. Skip that. Get rid of that. All right, let's go back to the 1 hour. So already for Monday and for Tuesday and for Wednesday, we catch a trade on Monday. That was a W if that's what we'd have played. We did not catch a trade on Tuesday, and it would have been a safe trading day. We would have caught a trade on Wednesday, and it would have been a clean trade and a W trading day. Let's see what Thursday and Friday puts up for us. All right. So as you can see, previous to market open, we are obviously in an uptrend. In London session, we obviously don't catch a sweep. Oh, I'm tripping. We end up catching a sweep with New York session. So let's just go ahead and say, yes, we're in an uptrend. It's pretty clear as day. Price creates rejection, and then obviously we got you another blue candle right after that. So uptrend. And I really hope this is actually like realistically helpful for some of you guys. Other than you just ignore my commentary sometimes. So we catch a liquidity sweep, and obviously, previous high gets broken above after the sweep. Well, no, we catch a sweep to the upside, then we catch a sweep to the downside. As you can see, previous data was an uptrend, so we would consider that as a sweep. That's just the best idea, best bias, more or less. Can't even speak once again. All right. Ignore myself. This day, I think we actually caught a W, but I still was sitting here catching losses. And I will say this. My mental was wrong. My mental was jacked up this entire week, all because I was catching losses before I would catch a W. I don't like losing and then sitting here catching a dub. That doesn't make me happy because number one, I shouldn't even be trading in a scenario where I can catch a loss if I know my strategy. Now it's different when I do play my strategy and I had confidence and then for some reason I got taken out. That's okay. Now, if I'm sitting here forcing a strategy, that's different. With that being said, liquidity sweep in the 1 hour, we catch a liquidity sweep in the 5 minute. Right here, this low gets swept. Prices consolidating. Anytime you see consolidation, you should always think that there's going to be a reversal. We go down to the 1 minute. We're just waiting for our full strat to be played. All right. So as we can see right here, this low gets swept by this low. We wait for a breaker structure. And since there is a doji right here, we won't consider that a high. We will consider this candle right here the high. Do we see a fair value gap anywhere? Inverse fair value gap anywhere? No, we do not. So what will we do in this situation? Wait for price to reveal a fair value gap or inverse fair value gap. In this scenario, I want to explain something. This is exactly why you have a valid stop loss, especially whenever you're in consolidating phase. Kid you not. We wait for a valid fair value gap to come up into play. And as we can see right here, fair value gap was created and a freaking valid retest was put into play. Where would your stop loss go in this situation? If you would have sat here and entered right here, stop loss would have been under this low, you would have got swept out. And I think me and TJR both got taken out of this trade, and then it ended up going out of direction. What I'm saying is, if you would have had your stop loss to the initial low that was safe, never would have got stopped out. Price would have came back and then sat there and showed you the valid retest zone right there, entry. So let's just act like we put our stop loss right here. And then if we sit here and just wait for the retest right here, we would have waited for price. Bro. As you can see, I need to go get my son. Take profit at the high. It's just really messing with my mental, you guys. It's just really messing with my mental. All right. Take profit would have been at the high on the hourly. As you can see, if we would have read this trade out, we would have won it. So we could have caught a loss on the first trade, and then we could have caught a W on the second trade. We would have basically got in at 10:30, exited the trade at 12:30, 2-hour trade. We would have caught 12:39. We would have caught a 17 pib. I mean, 27 pips. That's what we'd have called. So we called a W trading day. That's just moving it. That's just it for moving forward. Just breathe, Q. All right, so let's go ahead and move down to Friday. As you can see, Thursday, if we would have stuck to our rules, the only trading day that we would have actually called a loss on would have been Thursday. But as you can see, Monday would have been a W day. Tuesday wouldn't have been a trading day. Wednesday would have been a W day. Thursday, we would have called our first loss, and then we also would have called a W. All right, let's play this one out. See how this happens. Previous to market open, this is our high, and this is our low. As we can already see, we catch a liquidity sweep in the 1 hour as soon as market opens. Um, All right. With that also being said, we catch a liquidity sweep right after market opens. After this low was retested, draw down to the 1 minute. Now, I'm not gonna lie. I just realized something. This is so huge. Every time you're in a consolidating phase and you still catch a liquidity sweep, put your SL at the low, the lowest low. But if you're ever in a scenario where price is actually moving in a direction and you catch a valid retest from a fair value gap, you don't have to worry about extending your stop loss. That's a gem right there. All right, liquidity sweep. I don't need to bring up the thing again. We get a break of structure. Here is a valid retest right here. And I'll put it to you like this. Valid retest. And I'm moving through this one because I actually got to go get my son. Catch your entry right here. Stop loss at the low. We never would have got taken out. Targeting previous highs. And in that scenario, would have been a W trading day. Now, if we would have wanted to target even higher, I'll show you guys this. Here was my initial like actual take profit day. I just never ended up, putting this one because I was just stressed out. I was going through too many things. All right. We extend it. W trading day. Literally W trading day. WWE. All right. So 9:40 would have been an entry. We would have got out at 11 o'clock. So an hour and 20 minutes. We would have called. We got in at 9:05. We would have exited at 9:30. We would have caught a 32 pip trade. W trade. So as you can see, the entire week we caught W's. There was only one loss in that day. We still came up with a profitable day. Would have only had one trading day that we didn't trade. And as you can see, you guys, this is my strategy. If I follow my rules, you can see that I will be a profitable trader. If I don't follow my rules, you see that I will not be a profitable trader. Long story short, have a system, stand by it, go back and back test. You guys don't have to sit here and back test previous weeks, and keep going backwards. Just freaking do the previous week that you just traded. Go back and understand why you lost. If I wouldn't have made this video, I wouldn't understand that if there's a consolidating phase, put it at the order block low. If I wouldn't have understood that, I would have kept making this mistake. And what I'm saying to you guys is sometimes you just need to go back and look at the charts and understand why you lost. It's not about my strategy sucks. It's not about I'm just a horrible trader. I was making myself be a bad person to myself all because I didn't extend my stop loss. This just was the golden sauce for me. This is going to change everything for me. So I really appreciate for all the people that actually stuck by and actually like watched this to the end. Once again, excuse my vocabulary from freaking start to finish. At the end of the day, I love you guys. Jesus love you guys. We're gonna prosper in trading. I will literally take you to the extreme of understanding why you need to be a profitable trader and how you can be. Am I sitting here saying that I'm gonna, take every step and then you're gonna be this way and it's 100% guaranteed? No, you have to want to be a profitable trader, and it's only gonna come through your own actions. And what I mean by that is there's no guaranteed anything. You're gonna guarantee a loss, absolutely. Can I guarantee you wins? No, I cannot. But I can guarantee you cries. My Lord and Savior. Hit you with that sword, boy. But in Jesus' name, I thank you guys. I love you guys. Like and subscribe and show some love in them comments. Your boy needs it. Amen.